Thank you so much. Very good afternoon, everyone. And thank you, sir, for felicitating everyone with the award. And we'll begin the discussion with the topic is around collaborate or compete. And it's almost between banks, NBFCs, FinTechs, and insurance. While opportunities for the same customer and the set of regulators who are driving, I think the way we have seen banking or insurance or investment last 20-25 years, it has always in accelerated mode. While it was always opportunity when you talk about banks which are governed by RBI, and there were a lot of products came by banks called current banking or a savings account, and all of a sudden some business models started going out of the banks. So I think first thing which we have seen is a payment gateway. It came as an opportunity for banks to create a connector or a payment gateway which is between e-commerce merchants and accept that payment. But bank has said it may not be their own role, right? And that is how we have seen some companies like BillDesk and 8-9 companies came, and today that has appeared now. Multiple other business models are coming. And I think after 2014, when we started adopting banking on a DPIs, Aadhaar or UPI, I think we have seen surge of multiple fintechs, multiple different models, not only in banking but in insurance also, right? We have seen Discovery coming in here, and we have seen such a good role of a data managed company like CRIF is there, and we have seen trade, which is coming as a different angle to really do better banking in India, outside of India. And while this is happening, there is a future finance, like opportunities are coming, maybe tokenization or digital assets. Banks are learning it again with the help of regulators. So while it was always an opportunity for banks, and when you talk about India, India is such a nice country, rather diverse country. We have diverse regulators also. Like for mitigating one rule in account aggregator, we need to say buy in or sign off from four or like from IRDA, SEBI as well as RBI. Now we have one more regulator which is a face of RBI, PFRDA, IRDA and SEBI in IFSCA, which is in a GIFT City. Now ultimately it is all about new business model, existing customers, and this is what we are moving on. So I'll start with one of those, my mentor always from S Bank. We have been working together, and good to see he's a CEO at M1X. Maybe everybody please introduce themselves whenever we start. And in the first segment we'll see why this collaboration or competition is required in the interest of customers, what has changed and how your respective companies participating into this in this change. Maybe starting with Munindra sir here.
Thanks, Prasanna. Myself, Munindra Verma, being a career banker for about 3 decades and then moved to a FinTech last year. Good to be here in this discussion. I think given the audience that we have, I think we got to enjoy our conversation really together as well. Specifically on the collaboration piece which you are talking about, I think especially in the financial services space, as you rightly said, there are 3 major sectors, banking, capital market and insurance. And in some way in terms of regulatory oversight, we have pension as well. And now IFSCA, and coincidentally, I've had opportunity in my career to engage with all the stakeholders, not so much with the PFRDA, but with all the at least remaining 4 regulators. And currently I'm being regulated by IFSCA for my entity. Having set the context, as far as the collaboration piece is concerned, Prasanna, I firmly believe that the way some of the traditional financial sectors were there in place, focusing on their own specific businesses, there was a need actually to see that the specialization comes for a particular focused area. And while I have spent a lot of my time in career in domestic and cross-border supply chain finance and trade finance, what I have seen, especially in the banking perspective, there were areas which were not so much focused by the banking sector for their obvious reasons, because they have been loaded with too many huge responsibilities. One such piece which I recall, which happened sometime in 80s or so, wherein currency notes, there was a concept of money changers and AD3s. So that was again a business of banking, but that went to money changers are big player in this space and banks are not. And then of course, as you rightly said, payment space. Payment space today, banking is providing infrastructure, but banks are not the primary, contact point as far as the merchants are concerned for payment ecosystem, given the data that we have, all across the country. So therefore, there was a need for kind of a focused niche organizations who can really pick up one area and make it large and make it effective at the same time for all the stakeholders. So therefore, in particularly in supply chain finance and trade finance, I am seeing it happening. I am seeing it happening at a very, very, very large scale. And at the same time, this is at very early stage of evolution, wherein if I can talk about one data which could be of some value to all of us, today in the Indian banking space or Indian financial services sector space, SMEs funding is roughly about 46-47 lakh crore. And in the last 5-6 years of evolution of trades as one of the digital public infra or a collaborative ecosystem, if I can mention about it, that collaborative ecosystem is today doing roughly about, throughput was roughly about 4.5 lakh crore and outstanding, is roughly about 1.5 lakh crore. So 1.5 lakh crore against the overall SME requirement of roughly about 46 lakh crore, which is roughly about 2.1-2.2%. So what I'm trying to highlight over here is that some of this collaborative ecosystem has added value to all the participants, the financiers, the buyer, the seller, and now, especially in the last 1 year, even the insurers. Insurers have come on the scene. So therefore, the collaborative model, the orchestrated collaborative model, I will say, the orchestrated collaborative model is the way to add significant value to all the stakeholders and therefore ultimately create value to the economy. Yeah.
Hello. Yeah. So yeah, Mr. Varun, if you can introduce yourself and what's your view, how the momentum is on, while you are not fintech, you are not bank, but you are in between everybody and accelerate the momentum for all with the data, which is very, very important aspect.
Thanks, Prasanna. So, I'm Varun. I lead the data solutions business at CREF. CREF is a credit bureau. CREF is an account aggregator. CREF is basically a data and technology company which, through our RBI licenses, we essentially hold the complete credit exposure data of all both retail and commercial entities in India. Right? Now, as you said, we sit in the middle. We actually get a ringside view of how and what's happening between the banks, fintechs, or how this industry is changing. And this has been a very transformative industry over the last, I think, 10 years as fintech has evolved, specifically in the lending space, as well as payment space, right? So lending, payment, and today that wealth, that's moving towards a lot more towards wealth tech on that side. I think from a transformation point, from an industry point, what fintechs have come in and done is essentially picked up areas where banks were not agile enough, right? And expanded that market, whether that is on the retail lending side and whether that is on the SME lending side or a commercial lending side. But all of the areas where, because of the bank structures, because of the legacy structures that they already were carrying, they were not able to effectively, in the right cost manner as well as in the right distribution manner, able to go in. And that has been the biggest change that's happened in the industry. When we work with, so we work with both sides of the players. We work with the lenders and which is the bank or the licensed entities, and we work with fintechs who are today LSP or of that matter, right? LSPs have expanded the essential lending market today to a range of people who never were going to be able to afford a loan. Okay. Today, because of the LSPs, the form factor of loans have also started evolving. So when we were earlier used to think about, we used to say, okay, there is a credit card, there is a home loan, there is a auto loan, which is a traditional form of loans. Today, the number or the kind of loans that are innovated by these fintechs allows for their ability to be able to cater to a much larger overall industry ecosystem. Right? If you look at the borrower count in the last 3 years, post-COVID essentially, between the 5 years, right, India's credit active population has almost doubled. Okay. So the credit active population that used to be closer to about 160, 170 million people is today closer to about 360 million people from a credit active number. Right? So that's almost doubled. What has also changed is earlier we used to see a huge component of new to credit customers coming into the ecosystem, which would be about in the range of annually in the range of about a 25% first time borrowers who would first time come in. Over the last 12 months, if you see, that has significantly slowed down because these fintechs have enabled a larger population to already get access to that credit, and today only about 5% of the people is new to credit within the ecosystem. So that has started to shrink. Right? But the first entry point of the products has also changed. Right? Now you see CD at a small ticket loan, you have 5,000 rupee loans, and all of those people are first time borrowers who were never getting an access to within the banking ecosystem in earlier. But today all of those people are getting access. All of the first entry loan is when I am taking a 5,000 rupee loan, second entry loan is that take 15,000, third is a two-wheeler, fourth is an affordable house, fifth is a proper mortgage where I am moving towards it. So that's the evolution that we see. Earlier someone had to wait till the time that they are earning a lakh a year bare minimum or 2 lakhs a year when they would go and be able to take a two-wheeler. So your entry points of products are changing. And that's all happening because of the fintechs coming in and being able to create that market.
I think good. I think you just gave how CRIP and account aggregator and how the landscape is changing for lending per se. Now, which is one more sector which is insurance, right? So, and we have always seen such a great journey by Discovery in the insurance sector. While selling insurance is very easy, but how to utilize that insurance is what I think Discovery has really helped for many of them. Right? So, Karan, so how was your journey, right? Rather Discovery journey? How do you see insurance sector is evolved from those so-called LICs and New India Insurance? Now all of a sudden insurance also become one of those products, while still there are gaps. Like I think maybe 3 to 6% adoption is there at personal insurance level, and there is a lot to do. And at corporate level, a lot of awareness is to be done. So maybe overall insurance sector you would like to guide.
Hi everyone, I am Karan Thakuria. I run partnerships for Discovery. We're basically an API layer for the insurance industry. So we run the stack for insurance distributors, banks, NBFCs, wealth managers, for them to sell insurance to their customers. So that way we have an idea about how distribution overall is evolving within the industry over the last decade or so. So Prasanna, like you mentioned, right? Earlier insurance was agent-led. And when I say agent, it's not the AI agent that everybody talks about. It was like, obviously the LIC agent-led model where individuals specialized in a particular type of insurance used to go door to door and sell those products. As the industry opened up, we had a lot more players coming in, a lot more types of insurance being underwritten. That is where the era of comparative purchases came in, right? So when you have multiple providers, the customer finally had a choice of what to buy, and there was enough competition within providers to underwrite better products. So over the last decade or so, if you would have tracked how health insurance has evolved, earlier all Mediclaim policies were fairly standardized. Come 2015, I would say, from then to now, the most evolved medical policies cover a lot more. So an insured person is spending a lot less out of pocket than what they were spending earlier. That's one thing that's happened from the manufacturer end. The other evolution that's happened is on the distribution side. So distribution has gone digital, yes, not to the extent of any other financial product, despite that. Insurance is fairly complex. So while awareness is being driven digitally, we still find that the complexity of the insurance products require human intervention, require a trust loop that today gets closed via human interaction. And that is a big space where companies are investing into agentic capabilities, and now I mean the AI agentic capabilities of closing the trust loop with an AI agent as opposed to a human doing that. Now, this is where we feel that there will be a lot more scale. So there is enough scale that has been built into awareness over the last 5 to 7 years, but from an awareness to trust to actually consumption, that leg is something that we see AI playing a major role in sort of expanding within the overall insurance market.
Good. I think while we have seen such a good momentum in banks, fintechs, insurance, and next here from the capital, right? Yeah. Neither. Yes, sir.
Yeah, so hi, I'm Mudassar. I head partnerships for Drip Capital and Trade Finance. What this ecosystem in terms of the collaboration between NBFCs and banking and fintechs has enabled for us is the generation of newer collaborative ecosystems. Within trade finance for SMEs, it's a very referral and closed environment where trust deficit is very important. So when you build these collaborative ecosystems where there's a fintech player which is innovating on new types of products, backed by a partner such as a bank or ITFS platforms such as M1 Next, that enables us to capture the market and service the requirements of the traders and exporters much better. Right now, what we see the requirement of the market, specifically in the niche trade financing segment, is the need for fintechs or any entity to understand financing as a trading partner for the company and not just as a bank, thereby servicing the particular shortfalls in working capital gap, being fast enough to accommodate their requirements, which a bank may not necessarily do because, as rightly said, they are burdened with a lot more responsibilities. So collaboration, as of today, Drip Capital is partnered with major private banks, ITFS platforms, and these collaborative ecosystems help us to get into the market faster and service the customer's requirement in a turnaround time which is matching their own trade cycles and their own working capital requirements. This is something which previously would not have been possible. If you look at the speeds at which receivables and payable financing is happening in the country today, we are able to disburse under 24 hours, right? Huge ticket volumes under 24 hours, which is still a challenge, right? Where the banking norm is around 3 to 4 days, 5 days, 7 days for similar ticket sizes. FinTech has enabled this, data has enabled this at the FinTech end. The banking contributions have enabled this in the penetration end, and this is something which really enables to service the growth engine need for this country. Yeah.
I think, and we have seen this, I think, sir, you also spoke, DPI has played a major role, digital public infrastructure. So, Manindra sir would like to understand what is this DPI and what all those primary set of DPIs has really helped for a better banking, payment side, lending side, and in the trade side. And is there any need of any more DPI, at least in a trade, which can really amplify India in a global market?
Very, very relevant and interesting point, Mr. Na. And I would like to draw your attention or probably share with you an experience. Reserve Bank of India was celebrating its 90 years of its, 90 years of its service to the nation. And in the year 24, they were celebrating, as a part of this celebration, they had a global conference on digital public infra and emerging technology. Not sure if anyone of you participated. I was privileged to be there in this event in Bangalore. And in that event, they had, of course, industry stalwarts. And there only they launched ULI, Unified Lending Interface. But the highlight of that event was that they called central bank from 47 countries. Why I'm just trying to share that with you. So the focus of the event was, and Shaktikanta Das was the governor at the time. So focus of the event was digital public infra and emerging technology. And while there were various discussions, they showcased 6 such digital public infra. They according to RBI, understanding and RBI estimation, as far as India is concerned. So according to that, I would like to draw your attention to the way they listed down those 6 such digital public infra for showcasing to the world. 47 central bank matters a lot, right? So the one was Aadhaar, and all of us have benefited. There used to be cost of at least 700 to 800 rupees per KYC. Now it has come down to some 40-50 paise, right? So one such digital public infra they talked about was Aadhaar, which is not RBI initiative, it's Government of India initiative. In fact, this is an initiative done by the government prior to 2014. This government, 2014 onwards, they really scaled it to this level. So one was that. Second one which they talked about was UPI, Unified Payment Interface. This is indeed transformational. When you go to even Eiffel Tower, you can scan in and take the ride up. So therefore, second they talked about was UPI, right? Third they talked about, which was they launched in that ecosystem, was ULI, Unified Lending Interface, which is yet to really take shape in a big massive manner. But ULI was another piece which they talked about. Fourth that they talked about, which is yet to really see the, really get the right visibility, but people in the financial services sector may be knowing, that is CBDC, Central Bank Digital Currency. That's the fourth one, right? Fifth one that they showcased was the clearing ecosystem in the country. So IFTAS, if you know, IFTAS, they run, if you recall, all of us use something called as NEFT. All of us use something called as RTGS. So beyond 2 lakh rupee, 2 lakh and above is RTGS. So particularly these two ecosystems run on a concept called as Secured File Transfer Protocol, SFTC, Secured Financial Messaging System, SFMS, which is run by and body under Reserve Bank of India called as IFTAS. And lastly, they also showcased trades. Wherein I was part of trades, that is trade receivable discounting system. So these are some of the major, there are more, but from the RBI showcasing perspective, they wanted to showcase and export these technologies to the world. So from that angle, they showcased these 6, and some or the other way, all of us are harnessing these ecosystem like anything. Aadhaar, I am sure all of us are harnessing. There are many more like GST and other such. I will call GST as a digital public infra because many of us are harnessing. So I would, at this point in time, kind of pause myself by saying that these are the 6 which was showcased by RBI, and probably these are very, very important infrastructure for the country.
Thank you, sir. I think as the India stack, the way it has started with, as you rightly said, and one more account aggregator which we look at this, right? So maybe Varun, you would like to highlight why DPI is so important, and now CRIF and there are other entities who are powered as a data sharing entities, right? CRIF or Experian and others. Is there any other new kind of a product will evolve because of a DPI and the nature of a DPI? And I think when you talk about DPI, it has some properties like payment has to be there where UPI is there, or data exchange has to be there, maybe interoperability. And there are some challenges in Indian current DPI which is still yet to be addressed. So your view on account aggregator as a, and how do you see the future of DPIs in India?
Yeah. So, Prasanna, yes, I think 2 stages. So, one, when we say DPI, DPI is something which has a massive scale and impacts a very large amount of or large number of population because of the way that network is built, right? Whether it is Aadhaar, which is on the KYC side, some of the others that Narendra sir mentioned, which were more around like your specifically around ULIs and so on. So ULI, right? So when you think on ULI specifically, right? And that is impacting in a lot of ways, even as a bureau for us, right? What is it that RBI is trying to do? RBI is trying to create a unified stack for lending. They are saying that there are so many data points that get used within the lending ecosystem. All of them, can a lender access them on a common place? There are various uses that we do it for. We want to understand what is the customer's exposure. We want to understand what is the customer's income. Largely, those are the two things that any lender wants to understand when they are trying to finance a loan. Right? And those data points come from various places. Bureau is one of places where Bureau has all of the data around their exposures. So they say, why does every lender have to go and integrate with each bureau separately? Can I make one common interface? Account aggregator on that side is a place which tells you what is the income plus assets of everyone, both at an individual level as well as a asset level, or organization level. So they say that can we also bring this about and make it a common platform and a common place where this information is available. Now, it is two layered. First, if we look into account aggregator and what is account aggregator and why is it needed. Now, we have all gone through some sort of a loan journey and at some point in time taken a bank statement printout and hand it over to an agent or a bank branch where they have gone and done it, which essentially is both in terms of security, both in terms of information validity, both in terms of possibility of fraud, both in terms of risk of losing your data. In all of those scenarios, it's a risk that we carry during that process. What account aggregator does is completely replace that cycle and say, I will go back to the source and get that data. Right? Yeah. And that is where it makes the process very seamless, right? In terms of sharing of information from an income perspective between various. Now, why is it why it has a similar challenge as UPI in terms of the adoption. UPI, someone is funding it, right? From a government point, to some extent, which has led to the adoption at a very wide scale. Right? Within the account aggregator world, the data is still sitting at source, which is banks or insurers or mutual fund organizations, AMCs, right? And all of those are the people who have to share their data out, right? Now that's an exercise and that's a cost to those businesses. So while there is I think the whole ecosystem agrees that they want to do it, and everyone is inclined to do it. There's a level of process which takes over. So that's the adoption cycle that's going on today. And if you look at within the account aggregator today, on a month-on-month basis, there's a 20% growth in the number of consents that are being generated. So if you look at an annual growth, it's essentially monthly compounded 20% CAC, right? And so the adoption is going at a very, very fast pace, and we see that happening. And I think that is enabling a lot of new kind of credit products also coming into the picture. Part of something like a credit on UPI, which would not have been possible without UPI or without something like an account aggregator to make it available at the lowest cost for a ticket size at the point of sale. In fact, including payments. So it covers 3 different pieces. It is at the point of payment with the data that is going to be available from a bureau and an account aggregator to be delivered on a rail which is UPI. Right? So all of those things are happening and are coming together. So that's how DPI is influencing how our products into the banking ecosystem are changing.
Yeah, exactly. And while it has been built and these layers also getting evolved, the kind of a UPI we had seen back in 2016 and now it is getting evolved. And moreover, new business models are coming on top of these DPIs, right? So while Aadhaar is there, we talk about DigiLocker, while UPI is there, we talk about CBDC is getting, you can buy CBDC through UPI. While I think how, now in insurance also, and you said discovery itself is a layer on top of, so how do you see the role of a DPI for amplification and process enhancements in the insurance space?
So we started the conversation with collaboration and how you're collaborating between different financial institutions, right? Fundamentally, first I think without DPI, the collaboration itself is suspect. You need the layer of DPI, you need consented data to be shared amongst entities to actually have a collaborative approach. Otherwise, historically, if you were to see, the banks owned the data, right? The transaction layer owned the data, and all the intelligence that could be built was limited by the bank's capability to build that. Now, over a period of time, what's happened is because of DPI, because of data sharing, because of now with DPDP consented data sharing, access to that data will eventually get democratized. When access to that data gets democratized, so is the intelligence layer on top. So there will be a new set of people, a new set of FinTechs who will be able to gauge and underwrite, I mean, when you talk about lending or insurance, an individual better than a traditional player. So there is an additional incentive for a new class of entities who don't own the transaction to still own the intelligence layer on top. And I think that will lead to a lot of innovation because, I mean, these people are folks who will only rely on those recommendations, those intelligence to build a business on top of it. So there is no incumbency in terms of existing businesses, no legacy to be protected. And that is where DPI, that is where we will see the real value of consented sharing of consumer data across financial institutions, really giving a fillip to the overall ecosystem.
I think it's a good, like while DPI is there, DPI builds a lot of data, right? So, and there is a regulation of data to use it or not use it. Now looking at investments and capital market and trades and so. But what's your, what's your view, how DPI has changed the trade as a business? Like, sorry, that's so guided, but what's your view on that? And how do you see whether we'll be able to do international trade more easily, avoiding a lot of documents and many others? Yeah.
I think DPI has really accelerated within the trade finance ecosystem the speed at which we can deliver financing. So right now, if you look within the system, we look at Aadhaar, KYC, GST, a lot of banking information. This becomes an input layer which we rely from the Indian DPI infrastructure. But there are also fragments within cross-border insurance that is required, information on the underwriting of the cross-border parties, which we are not able to do at the speed at which we are able to underwrite the Indian entities. So a marriage between these two will really accelerate the speed of deliverance, and also, like you mentioned, the additional intelligence layer which can innovate and come up with new products within this system itself. We have been working on some innovative new products on the lines of purchase order financing, on the lines of buyers financing within India. Now all these, of course, because we have the public infrastructure here, we are focusing a lot of our trade products catering to the Indian ecosystem, the Indian exporter and the Indian importer. What remains to be worked on is the fragmented cross-border infrastructure, which is not really worked upon yet. So while the intelligence layer is there, right, the infrastructure on the cross-border part is not yet there to support the pace at which FinTechs like Drip Capital are growing, right? So DPI plays a very important role. In the last 5 to 6 years, the number of customers that we have scaled, we have come up more than, I think, 3,000, 4,000 customers, trade partners that we have. We are able to finance them definitely because of the presence of the DPI layer that is underlying. So yeah, DPI has tremendously helped us scale the business, but there are fragments on the cross-border part which really need to be brought to pace.
Like imagine we have a DPI, various tax, and other country has that interoperability. Like while in the payment, that interoperability will come with the CBDC because the standards are coming while with companies like BIS come into picture. Cross-border, a lot of research is happening. There are at least 15 projects among many countries is working with. The payment will be solved, but there is a lot to do around that. Now looking at while banking we have seen the DPI role, customer have changed. While there are a lot of legacy processes are getting enhanced with the multiple tech. And when you talk about tech, we always these days talk about AI. Like, and if I ask anybody in the bank or every company, either they are learning or understanding or seeing what could be the ROI, and they are part of that journey also. While we are part of that journey, we need to really apply AI because it's costly. It's not so cheap. And while we had seen earlier avatars of AI like process automation or RPA, so what is that AI has changed and how AI is changing? And rather India is sitting on such huge data. Maybe we start with Varun and see how it can come up. So do you think AI is a priority in CRIF and how it is really creating new kind of models and new kind of process optimization which will help end users here?
So, Prasanna, I will talk about AI in two parts. And one, there is an AI that we have been always using. So, which is the machine learning component of building our models and building our scores. And I think that's been in process for the last at least 15 years, if not more. It's evolved in a lot of techniques, but it is the machine learning, the deterministic AI that we have been using. Right? The AI that we are now all talking about, which is over the last 4-5 years, is more around the generative AI component, which is more around how do we synthesize information and communicate it accordingly. And that's the use cases that it is being deployed in CRIF, right? That is for both scenarios. It is for scenarios where, so we are also a consumer-facing organization. So you can come in and pull your own credit report, right? So there are, and whenever you are a consumer-facing entity, you have all of the customer service piece which comes in, which means how do you engage with customers, in case they have issues, in case they have scenarios where they want to ask questions. So all of that is areas where AI is today playing a starting role in terms of we are evaluating how do we make sure we are able to provide a better customer service and a faster customer service using AI, right? The second is in terms of our products to the market. We were talking about account aggregator some time back. Now think of the amount of information that flows via banking, right? Now that's just via your account statements. The second is what starts flowing via GST, what starts flowing via this thing. And when you are doing something like a drip capital or your trade exchange, your underwriters are also trying to synthesize all of that information. So today AI is for us getting embedded in our products, where we are creating core AI agents which will give you a next best action and a summarized information and highlight some of those challenges which are needed. So for your agent to be, or for your underwriter to be able to take a call. So there are scenarios, I think there's a journey. We still have human in the loop. Yes. We still propose, because AI is, while we are all developing it, we are dealing with highly sensitive data and sensitive scenarios. So maybe there is a scenario in the future when that changes, but today all of that keeps ensuring how do we make humans better and more efficient using AI and providing them the right kind of information at the right kind of time with the right action to be able to move things faster and quicker.
Excellent. So how do you see can you operate this story without AI? Right? While everybody, but what is the optimum way to use AI? What are some of these use cases you see to identify those insurance claims? Are they really good or not good? Yeah.
So the first point of adoption of AI within insurance happened on the claim side, where it was primarily used for fraud detection. Yes. Then it moved on to underwriting, where you get access to, like you were saying, you have access to tens of sources of data. How do you synthesize that very quickly and still deliver a policy in real time? So started with fraud detection, then moved on to underwriting. At Discovery, we sit very closely on the distribution side as well. So we work with banks, we work with NBFCs, and we have a clear view of how those entities are distributing insurance. A use case for AI that we see everybody doing, and we've sort of built models on that as well, is recommendation. So on the distribution side, for a product as complex as insurance, where recommendation is required not just for the customer, but also for the seller. So today, even sellers are not attuned to the nuances of an insurance product. So the biggest challenge that we see, so while we are able to create models that are able to give out recommendations, removing bias in recommendation is the biggest challenge when it comes to AI, because if the right guardrails are not put, how do you ensure that AIs are not optimizing for, say, higher margins? How do you ensure that AIs are not optimizing for a sale as opposed to optimizing for user benefit? So the way we are looking at AI is AI which sits within a set of rules, within which there are a set of guidelines, within which are generative AI capabilities. So a 3-layer framework to ensure that AI is able to do its job while at the same time being cognizant of the regulatory aspect, being cognizant of the ethical aspect of recommendation.
Yeah, I think wonderful. I think you spoke about use cases, how to utilize as it is. So Muninder sir, Like now AI is everywhere, like almost everybody is utilizing AI. But there is one more angle. Nirmala ma'am spoke 1 week back. Banks should come together and collaborate. Another way to collaborate. Rather, fintechs also should come and collaborate to use the right way of utilizing AI. So, what's your view of risks in AI, and while adopting AI within a FinTechs, how do you see step-by-step approach organization has taken?
Banks should collaborate. As far as this aspect is concerned, very important to reflect on the basics that banks are in the business of intermediation. Their basic role is to originate liabilities or deposit and ultimately give it to the productive sectors of the economy in terms of loan and advances. But in the process, there are multiple, in this entire process of intermediation, there are multiple steps. And here comes, issue of scale, issue of efficiency, issue of, probably not up to the speed. So a lot of micro steps comes in the process of entire intermediation. So therefore, in whatever micro step which is there, if banking sector, either they create or innovate themselves, or they get the best from the available ecosystem, whether it is fintech or whether sometime in a specialized agency, or for that matter, sometime very dedicated agency like a credit information bureau. So depending upon the, steps of the entire process of intermediation that we can imagine, if we can really make the process easy, efficient, scalable at fraction of a cost. So in these four major parameters, if we can use technology, whether we call it as artificial intelligence or original intelligence, whatever name that we would like to give, but these are the various micro steps which are there, which are required to be picked up. And on the insurance side, on the credit bureau side, account aggregator is one such huge example. So these are really, some of the micro, these are filling in the micro steps, ultimately with the scale, which is ultimately making the entire cost of doing business lower. It is giving us scale, it is giving us efficiency, it's giving us a lot of ease of doing business, and in the process everybody benefits.
Yeah.
I can only say that when we slice and dice the micro steps, then there would be huge opportunities for the banking sector to engage with different such value added providers, and ultimately we collectively as an economy benefit in the process.
Yeah, I think you touched upon last word, economy, and I'll take a view in interest of time. If everybody can talk 10 to 15 seconds or 1 minute. Viksit Bharat, which is our aspiration, our next aspiration, is not only banks. Every organization, every top leader is looking at how they contribute to the economy, trillions of the economy. Look at it, right? So while we have seen individually banks are working, what is there for banking? So if you have to do some new age product like Discovery was not there. Now Discovery itself is a new product model. How to really process the claim, right? While there was a process of giving the loans in the bank, but now with the like or account aggregator which is easing out the process of verification of data. So how do you see what is that next way of a collaboration or a new product which will really enhance the economy? Maybe 10-15 seconds everybody gives inputs. Yeah, starting with this.
Yeah, from a cross-border trade finance perspective, we have been very actively collaborating with governments. We're working with the government of Maharashtra. We're working with the Export Promotion Council for handicrafts, something in Tamil Nadu also that we are doing. And the idea is to innovate the intelligence layer that we are able to develop, innovate on cross-border products which the traditional sectors, the traditional banking channels cannot do. As of now, there are two important new pain points that we are solving for the exporters across the country is advance against purchase order, right? Which enables the exporter to have the money even before the goods are made, right? And that is a huge benefit which only technology and data infrastructure and the ability of AI to collate all this data and be able to underwrite them and bring about a financial product within a span of 2 to 3 days and solve a real industry problem. It has enabled us to do. So this has been really helpful, and of course, contribution partnerships, AI, and infrastructure has enabled us to build this intelligence layer and bring out new products in the market. We continue to do so and continue to scale our business on these lines. And this is something I see as the future as we innovate further financial products for the masses and for the industry.
Thank you, Varun.
So the way I see is, I think consumer side within the credit space has evolved quite a bit. There's a big scope for the economy to go and evolve on the MSME side, and there are a lot of these initiatives that like TREAD and everything else that is coming through, and that's where over the next one, from a Viksit Bharat point, that, and even from a data availability point and from a new product innovation point that I see happening around the MSME lending and going down even into, not I would say micro MSME lending, but that's the space where it actually starts to build up, which was an area where earlier data was always a challenge, income or cash flow generation understanding was always a challenge, and a lot of these ecosystems that we are putting around DPI, while they haven't completely solved for those, but with the data availability being more democratized across, whether that's transaction data, whether that's GST data, that's account aggregator data, that's e-com transactions coming on, or ONDC for that matter becoming more of a network within the flow to ensure the flow of data across. I think that's the space where we will see a lot of innovation in the next few years within the different sort of products for MSME and micro MSME lending. And that will be a biggest contributor towards a Viksit Bharat is the way I put it.
And your last
So I actually love the way you defined Viksit Bharat, right? Mahila, youth, the poor, and there was one more segment, and the farmers, right? These are, if you look at it, the most vulnerable section of our society. So from a Viksit Bharat perspective, and I'd like to sort of bring in the insurance angle here, this is the society that requires maximum protection. And this is the most unprotected layer of our society. The way I see insurance and AI in insurance helping the cause of Viksit Bharat is on three fronts. When you look at insurance, it needs to be available, it needs to be accessible, it needs to be affordable. Right? Initially it was neither, now we are sort of reaching there. AI plays a huge role in availability by basically being able to design products which are specifically meant for certain micro cohorts. It helps you get access via agents that are able to reach these people in a manner which is cost effective. Today, today a bank or an insurance company doesn't really find it economically viable to reach these people via traditional methods. And the third is affordable, obviously, because your overall cost structures are going down. You're sort of automating a bunch of processes, which is leading to a reduced cost of delivery of insurance. So I think combined with the innovation which is happening because of DPI and the benefits that I just sort of spoke about from an AI first point of view, that will significantly lead to increase in insurance access to the society which requires it the most from a Viksit Bharat point of view.
Munir sir, your last views.
So from Viksit Bharat perspective, various data indicate that our economy size would be about $30 trillion. Today we are about $4.2, $4.3 trillion. So with that economy, one of the important aspects would be bringing the required capital to support the economic expansion from $4.2 trillion to all the way to $30 trillion. And ultimately when we look at the economic expansion, we look at the consumption and the export-led economy. So therefore one point which would be relevant is that how do we bring global capital to support this growth? And therefore various aggregation model, and one such aggregation model which we run, which is financing the working capital of the corporate by bringing the global capital, we believe this is again going to be a very, very decisive factor in supporting the export-led part of the development of the economy. So therefore, I see more global capital coming in to support this growth to $30 trillion.
Yeah, I think we are seeing that some global banks are also coming and helping or accelerating the current bank's momentum. But everybody has really has given a lot of inputs. And while we have seen top layer collaboration which is happening for onboarding or accessing, there is a lot to do on the background, right? So because while one NBFC takes wholesale loan from a bank, there are a lot of gaps. while you have utilized API to onboard that, how to do reporting back, or how to have a right trust between NBFCs and banks. There are some gaps needs to be really still addressed, and most important part, regulatory is taking everybody along with the collaboration, and we have seen last 10 years so many guidelines are coming for filtering out some FinTechs as well as NBFCs as well as banks, and we are getting corrected towards larger vision, which is how do we become more resilient at a guidelines level, process level, organization level, finance levels, and AI definitely is an enabler which banks are, or NBFCs or FinTechs are also utilizing, bureaus also are utilizing, and good to see that it is not happening in silos with the government vision. How imagine finance minister comes and talks how AI should be utilized, or there are specialized officers who work or from DFS works closely with the MSMEs or these bureaus or account aggregator models. So we are in such a path which is always taken us to from one orbit to another orbit. And good, everybody has really participated with all the inputs. So thank you for being such a great expert on this expert panel. Look forward for continued dialogue and continued collaboration. Yeah. Thank you.
Thank you. We enjoyed the conversation. Thank you. Kirsten, thank you very much.
Thank you, Munindra sir.